Good morning and welcome to TOITOI Japan Market Radio. I'm coming to you from Tokyo on Wednesday, February 18, 2026. This is our daily briefing for global investors tracking Japan's equity, currency, and fixed income markets. Let's dive straight into today's session.
Thanks for having me. We saw broad-based gains across Japanese equities today. The Nikkei 225 closed up 1.021% at 57,143.84, while the TOPIX added 1.139% to finish at 3997.0. Growth segments outperformed, with the Mothers Index surging 2.989% to 2,343.0. J-REITs also participated, rising 0.964% to 2041.5. On the currency side, dollar-yen was relatively stable at 153.66, up just 0.033%. Commodities were mixed, with gold in yen terms climbing 1.069% to 17,960.0, and crude oil rallying 2.679% to $64 per barrel.
That's a fairly constructive picture for risk assets overall. Now, the main catalyst today appears to be trade data out of Japan. We're seeing headlines pointing to stronger than expected trade figures supporting the equity rally. Can you walk us through what happened and why this matters so much for Japan specifically?
Absolutely. Japan released trade data this morning that came in above consensus expectations. Given Japan's heavy reliance on exports, particularly in autos, electronics, and industrial machinery, this is a critical economic indicator. Strong export performance signals robust global demand for Japanese goods, which has direct implications for corporate earnings, especially among the large-cap exporters that dominate the Nikkei 225. It also provides evidence of economic momentum, which can influence Bank of Japan policy considerations going forward.
So from a market impact perspective, where do you see the most immediate effects? Starting with equities, I assume the export-oriented sectors benefited the most today?
Exactly right. Export-heavy sectors like automotive, electronics, and industrial saw the strongest support. Cyclical names outperformed, and large-cap exporters were particularly favored. When you see trade data this positive, investors rotate into the names that benefit most directly from external demand strength. That's a key reason the Nikkei outperformed on a percentage basis versus some of the more domestically focused segments.
And what about the currency side? I noticed dollar-yen was essentially flat today despite the positive economic data. Is that surprising?
Not really. Better economic data can support the yen through improved risk sentiment, but the magnitude of any move depends heavily on relative strength versus other major economies. Today we saw only mild yen strength, which actually ended up being supportive for exporters. If the yen had rallied sharply, it would have offset some of the positive earnings implications from stronger exports. So the current positioning, with the yen stable around 153.66, is actually quite favorable for Japanese corporates.
That makes sense. Shifting to the rates market, do you see this data influencing JGB yields or BOJ expectations in any meaningful way?
There's potential for modest upward pressure on JGB yields. Stronger economic data reinforces expectations that the Bank of Japan will continue its gradual normalization path. That could push 10-year JGB yields modestly higher over time. However, I'd emphasize that any move would likely be measured, given Japan's still flat yield curve environment and the BOJ's cautious approach. The key monitoring point here is whether this trade strength proves sustained or temporary. Consistency will determine whether it translates into broader inflation and wage pressures that would accelerate BOJ tightening.
Now, interestingly, we also have a separate report from earlier in the session showing the Nikkei actually dipped 0.42%. With 1,923 stocks posting declines. That seems to contradict the positive close we just discussed. Can you reconcile these two narratives?
Good catch. That report likely refers to an earlier point in the session or possibly yesterday's trade. What's notable from that data is the broad-based sell-off, with nearly 2,000 stocks declining. That kind of breadth suggests sector-wide profit-taking or macro headwinds affecting most Japanese equities at that moment. However, one standout was Murata Manufacturing, which surged 6.88% even as the broader market struggled.
Murata's performance is striking given the weakness elsewhere. What do you read into that divergence?
It points to selective strength in electronics and components. Murata is a leading supplier of capacitors and RF components for 5G and AI infrastructure. That sharp outperformance suggests investors are positioning into specific structural growth areas even during market consolidation. It could indicate institutional repositioning into quality exporters or tech-adjacent names ahead of earnings season. When you see this kind of stock-specific strength during broad weakness, it often signals where smart money is rotating.
So potentially a preview of sector rotation themes to watch. Meanwhile, on the global stage, we're seeing headlines about equities rising as AI jitters ease and gold rebounding. How does that global backdrop tie into the Japan story today?
It's highly relevant. Japanese equities, particularly tech-heavy names and semiconductor companies, have been under pressure from global skepticism about AI valuations. An easing of those concerns is clearly positive for Japan's growth-oriented sectors. We've seen names exposed to AI and semiconductor supply chains underperform recently, so this relief is welcome. At the same time, gold's rebound typically reflects weakening safe haven demand. That reduces the traditional appeal of yen appreciation as a risk-off trade, which is actually constructive for Japanese exporters.
So the combination of improving risk appetite and stable currency conditions creates a favorable backdrop. What's the net impact across asset classes from your perspective?
For Japanese equities, it's constructive. Relief from AI-related selling pressure and broad equity strength should support the Nikkei and TOPIX, particularly tech and semiconductor names. For the yen, we could see modest depreciation as risk appetite normalizes and safe haven demand fades. A weaker yen would be supportive for exporters and nominal GDP growth. On the rate side, if equity markets sustain these gains and risk sentiment stabilizes, demand for defensive JGBs may decline, pushing 10-year yields modestly higher from already low levels.
So the setup heading into the rest of the week looks reasonably supportive for risk assets in Japan. Are there specific risks or data points you're watching closely?
The key question is sustainability. We need to see whether today's trade data represents a genuine inflection in export momentum or just a temporary bounce. Consistency matters because it determines whether we get follow-through into corporate earnings revisions and whether inflation and wage pressures build enough to influence BOJ policy. On the global side, continued stabilization in AI and tech sentiment is critical. Any renewed volatility there would immediately impact Japan's tech-heavy indices. And as always, the dollar-yen level around 153 to 154 remains a key focal point for exporters and policymakers alike.
Those are the key themes global investors should keep front of mind. To recap for our audience, we saw solid gains across Japanese equities today, driven largely by better-than-expected trade data. The Nikkei 225 rose just over 1%, with export-oriented and cyclical sectors leading. The yen remained stable, which is actually helpful for corporate earnings. And we're seeing selective strength in quality names like Murata Manufacturing, even during periods of broader market consolidation.
That's right. The global backdrop, with easing AI concerns and stabilizing risk sentiment, is also supportive for Japan's growth sectors. The setup is constructive, but investors should monitor whether the positive economic data proves durable and whether the BOJ's normalization path continues at the current measured pace. For global investors with Japan exposure, the current environment offers opportunities, but as always, selectivity and attention to currency dynamics remain essential.
Well said. That's all we have time for today on TOITOI Japan Market Radio. If you're a global investor tracking Japanese markets, consider subscribing to stay updated on the latest developments in equities, currency, and policy. Thanks for listening, and we'll see you next time.